Good afternoon. Welcome to our monthly Philippine stock market recap. So we'll tell you what happened in May, and then we'll tell you what to watch out for in June, and then we'll tell you our stock picks. Okay, so first, what happened in May 2019? So first, it's good to note that despite the volatile month, the PSI is still up by 17.3 points or 0.2%, and we ended at 7,970 points. So year to date, now the PSA is up by 6.75% or 504 points. So what dragged the market? So first is the escalating trade tensions between US and China. So recall that both countries raised their tariffs on each other's goods. Second is the lackluster first quarter earnings report. So consensus, um, the, they expected 14% growth in terms of earnings in the first quarter, but what happened was only around 6.6%. Next is the lower than expected GDP growth in the first quarter. So recall that the actual GDP growth in the first quarter is only at 5.6% compared to an estimate of 6%. So that it's been a long time since we were growing only below 6%. So that disappointed the market. And lastly, some heavy net foreign selling due to the downweight on the Philippines in the MSA Emerging Market Index. So if you're seeing in the headlines MSA rebalancing, this is what they're referring to. So what supported the market? What made the market rebound? So first is the credit ratings upgrade from Debt Watcher, Standard and Poor to BBB Plus. So that actually attracts foreign investors to invest in the country. So that's what boosted the market early this month. Next is the Bangko Sentral ng Pilipinas cutting reserve requirement ratios by 2%. So of course it's been expected at around May 9, but what the BSP did first was cut interest rates, but eventually they cut the reserve requirement ratios. So that is good for the banks because they have more funds to lend. Next is the governor, BSP Governor Jokno. So the term he used in that interview was he promised to cut interest rates and lower the reserve requirement ratio further should economic data align. So that's the caveat. There should economic data align. So at the end of the day, that is positive for the markets, especially the property sector, because you will lower mortgage rates. Next.
So just a recap of what happened in terms of technical analysis and price charts. Well, as you can see, earlier in May, I mean, for the first week of May up to the second week, we have noticed some sharp declines attributable to the surprise declaration of President Trump that he will be imposing new tariffs to China. We all know that the current trade war last quarter is on a hiatus because US gave chance to China to do whatever it is that it needs to be done, but US now has decided to push through with the imposition of 25% tariffs. So the good thing, however, is that during the latter half of the month, we have seen some corrections moving upwards because of higher than expected earnings, and not to mention the implementation of the MSCI rebalances and the pronouncement of BSP Governor Jokno that there could be possible uh, additional rate cuts in terms of policy rates and reserve requirement ratios. If you're going to observe May 31 today, there is a strong volume near the 8,000 psychological mark. With that big of a volume and with RSI trading upwards and the MACD is already diverging with bullish momentum, chances are we might really go beyond 8,000, at least test those levels within the next few days. So what do we have to watch out for this June? First, we have May 2019 Philippine inflation. It has always been observed. As analysts, we always look into inflation figures, whether or not it indeed is already below if it is already lower, recall that the BSP has set around 2% to 4% range for the inflation figures, and right now, analysts are expecting it to be at around 3%. Estimates actually around 2.9%, which is already below 3%. The BSP also estimated it to be at around 2.8% to 3.6%. And one thing that you have to look out for is that when inflation figures went up higher by 3%, chances are we could see some corrections, downward corrections moving forward. But if it goes below 3%, it means it would be good for the economy and prices would be lower, and it would entice investors to go enter the Philippine markets. Another thing that we have to watch out for, I guess one of the most important, is the US-China trade developments. But not only that, of course, because right now I think the US has already involved Mexico by imposing another 5% tariff effective June 10, and another announcement wherein the US removed India in their general system of preferences. So if this stance of the U.S. government continues to disrupt the current global, the current economic status quo of the country, the world, chances are we might see some global economic slowdown. Another thing that we have to watch out for is Brexit developments. It's not as big as compared to the US-China trade developments, but still, the European Union is still, and England is still composed of a material part or portion of overall trade in the Philippines. We also have the BSP Monetary Board decision on June 20. We will see whether or not Governor Jokna will live up to the so-called promise on whether he would cut both policy rates and reserve requirement ratios. But of course, it will be dependent on the economic data that will be released by the government. And lastly, we have the US FOMC interest rate decisions also the same day on June 20.
So moving to our stock picks. Okay, so moving to our stock picks. Megaworld. So we've been pitching Megaworld since the start of the webinar series, and you will notice that we raised our target price to 6.7, so that accounts for 13.6% upside from the close of May 31. So at the end of the day, we like Megaworld because of its office leasing business. So we know that the BPO still accounts for the bulk of the office business of Megaworld, but what's cushioning the slowdown, a bit of slowdown in the BPO business, the Philippine offshore gaming operators. So that at bottom line, the office leasing business is still healthy and growing very well. So that benefits companies like Megaworld. Next is DM Wenceslao. So DM Wenceslao, our target price for that is 13.2 pesos. So that has a 33.3% upside. So we like DM Wenceslao because it owns Asiana City. So it takes advantage of the growing rates in Manila Bay. So just to mention some number, at around 2006 or at least 10 years ago, price there was around 30,000 per square meters. Right now its price is around 300,000 square meters. So the company took advantage of that, and now it's bearing fruit. So given that, in terms of the specifics of the business, it also benefits from the offshore gaming demand from the offshore gaming. Given that Asiana City, the businesses there are mostly office. Of course, they're moving towards building a township, but as of the moment, it's mostly office.
Another pick that we have right now is BDO. Recall that previously the BSP has made a cut in reserve requirement ratios, and when we conducted a sensitivity analysis on the effects of the RRRs, we have noticed that for every 1% cut in RR, it would improve the earnings of a particular bank by 2%. It would be highest among the big three banks, and we found out that BDO would be the would be the one with the most beneficial would be the beneficiary of a higher RR cut as compared to the other banks like BPI and Metro Bank. Not to mention that it maintains the double-digit expansion despite tight liquidity conditions. But with the RRR being cut by the BSP, assuming it will be cut on the June 20 board meeting, the liquidity conditions will be addressed. So again, we also recommend the Megawide Construction Corp. Our target price for Megawide is around 29 pesos and 10 cents. That translates to around 44% upside, mainly because of a strong airport operations segment. Recall that Megawide operates the Mactan Cebu International Airport, and the MCIA already accounts for 52% of the total income of Megawide Construction. If you are looking at this company, you may have noticed that on first quarter 2019, they recorded a slowdown in construction revenues, but that's mainly because of permit issues, which is not controlled by the company. So in effect, the accounting method, the accounting of the revenues cannot be recognized immediately, but chances are if the permits have already been processed and approved, that revenue recognition will be recognized by second half of 2019.
Another stock pick is it is our new stock pick, Pure Gold. Our target price for that is 54 pesos. So we're banking on um, waning inflation or easing inflation because, as we all know, the target market of Pure Gold is the lower to mid income market, which mostly are affected should the prices go up or down. Second is the sale of quality low priced rice should foster traffic growth for the company because it's good to note that 9.5% of household consumption is rice, and it would induce basket sizes and more people buying in the store. Also, the third one is the less aggressive expansion of SNR's competitor, which is Landers. So that should be beneficial for Period. And it's good to note in its first quarter earnings, it's the SNR business that mostly spurred growth, given its 22% net income growth in the first quarter. Our, our stock pick, which is actually recommended by our foreign research partner, Development Bank of Singapore. So they recommended Cebu Pacific. So we've been recommending Cebu Pacific ever since its price was still at 80 pesos and now it's at 90. So it's mostly because of still undervalued, given the risk. Yeah,
So if we have buy picks, we also have our sell picks. Right now, we are calling a fully valued valuation for Universal Robina Corp. Our fair value for URC is only at around 106 pesos, primarily because right now URC needs a winner brand. There are structural weaknesses in the domestic BCF segment. Also, the company is still trying to go back from, and they're also trying to recover from what they've experienced in Vietnam. Recall that there has been an issue with the C2 brand in Vietnam because of some E. coli activities or infections on the bottles, but and the market and that somehow affected their market share. And right now they're recovering from that. Not to mention, the company is also experiencing margin squeezes because of tighter competition and high marketing spending and higher sugar taxes, which has been recently imposed by the Philippine government. And lastly, another fully valued pick is we have Jollibee. Our fair value target for you for JFC is only around 265 pesos, primarily because of elevated manpower costs. Recall that the president has now implemented its endo laws, meaning The president is complying all other companies to recognize the regularization of the companies, and Jollibee uh, is highly contributive, has a high manpower cost. So if these employees, which are mainly contractual in nature previously, will be regularized, it will have additional costs to the company. And with that, we now open the floor for questions and answers. Our thoughts on SurePass. Previously, if we're going to just look into the chart patterns, SurePass was a good trade. Unfortunately, it has established a downtrend already, and right now the fundamentals of the company is not as strong as as it used to be. Right now, I think management is also focusing on the blockchain technology, which is somehow volatile. That's why investor sentiment remains to be volatile as well. Okay, for Now Corporation, pretty much the catalyst for Now Corporation has already subsided. I mean, the positive catalyst for Now to go up has already subsided. Recall that the stock went up because it is a potential candidate for the third telco player, but now it was already grabbed by Miss Latel. So Now Corporation's positive catalyst has already been broken. I mean, it's not apparent anymore. So chances are it might just trade technically uh, within a particular price range. But in terms of its fundamentals, right now we just have to rely on the quarterly reports, and it's not as stellar as well. Just a follow-up question for sure. Passing now, is it a good time because of the decrease in value? If I suggest you continue to just avoid these stocks because this is very speculative in nature, and you have to first have a deep you have to instill that fundamental analysis in your system before you execute your trades, because SurePass and now is highly speculative with no fundamental value as of the moment. Okay, we have MPI. Although the price is currently at a downtrend, if we're going to look into the business segment of MPI, it's quite decent actually. Save for the first quarter of 2019, because they have recorded some speed bumps in their toll units because of higher costs I mean lower revenues from their foreign counterparts. But if we're going to look at Meralco, if we're going to look at their tolls and their LRMC, I mean the rail unit in the hospital segment, it's pretty much performing quite decently as well. For Nickel Asia, it is okay as well. If we're going to look into the shipment volumes of nickel as of first quarter of 2019, and its prices is also within expectations. What can I say about IMI? Right now, because of the ongoing trade war, there is negative sentiment looming on IMI, primarily because the client of IMI is pretty much more the more Chinese, and China, as we all know, is currently being affected by the trade war. So if there are low demand for Chinese products because of the imposition of tariffs from the US, chances are IMI will also be affected by it. Should I sell URC and JFC? That would depend on your investor profile. But then again, we have to reiterate that we have a fully valued call for URC and JFC. So for URC, our target price is around 106 pesos. And for Jollibee, we have a fair value of 265 pesos. For GMA7, right now, recall that 2019 is an election season, and chances are for first quarter and second quarter, they might register higher revenues because of election-related spending. And with higher revenues comes higher net income, and hopefully it would give higher dividend yields come 2020. For AGI, Right now, Resorts World Manila is beginning to recover from that fire incident, and Emperador is also beginning to pick up its revenues in terms of, I mean, as of first quarter of 2019, it has already registered decent figures. Not to mention Golden Archers performed recorded double-digit growth as compared to Jollibee, and Mega World is as strong as ever, which is in line with the expectations as well. So I believe in terms of valuations, AGI is still a good company if you're just going to calculate the sum of its parts.
And that is it. Thank you, Royce, and thank you, Paul. Thank you as well to everyone who participated and sent in their questions. Our sincerest apologies that we weren't able to entertain them all due to time constraints, but no worries because our speakers here will be sending their responses as well through email. Before we reach the end of this webinar, we would like to invite you to follow us on our social media channels with the handle at FirstMetroSec and also join our growing community on Facebook. And if you haven't yet, download our mobile app available on the App Store and Google Play. And that is a wrap for the May wrap-up. We hope that this webinar will be of help to you as you navigate the market in the coming month of May. This has been Cara along with Paul and Royce, and we'd like to thank you for tuning in. And as always, with First Metro Securities, it's hashtag your future first.